Hi everyone. Today I want to show you a very specific long-term resistance zone that the project has identified for SPY, the $734 to $752 area. This isn't just one indicator screaming resistance. It's a rare, high-confluence cluster that lines up almost perfectly with what Tom Lee and several other major analysts have been calling for on the S&P 500, targets between 7,300 and 7,600. The system is built around Murrey math lines plus daily, weekly, and monthly pivots, Fibonacci extensions, Gann angles, volume profile nodes, and role reversal logic. It only flags a level as major when at least 9 out of 12 methods agree. Right now, the system is lighting up $734 to $752 as a long-term resistance zone with a perfect score of 9+. Let's break down exactly why the system sees this zone as so important. First, Murrey math. On the current 2025-2026 bull leg, the math projects the 8/8 ultimate resistance line right around $750, with the plus 1/8 overshoot sitting near $752. The script literally labels this ultimate resistance, extremely overbought conditions. Second, monthly R2 and R3 pivot points from recent months land directly inside this same window. Third, Fibonacci. If you measure the 161.8% extension from the March 2026 low at $629 up to the recent highs, it lands smack in the middle of $734 to $752. Add in falling Gann angles, the long-term trend line from previous cycle highs, and a major volume profile VAH node from late 2025 distribution. Every single method is converging here. This is the kind of confluence the system waits for before calling something a true long-term resistance. In backtests on real data, when SPY has hit similar 8/8 ultimate resistance clusters with this much agreement, it has produced clean reversals or at least multi-week pauses almost every time. Historically, when the system flags these zones, we usually see one of three things: a quick 3 to 8% shakeout in the first 1 to 2 weeks, or more commonly an 8 to 15% intermediate correction down toward the $687 to $703 support zone we've been watching, and in stronger cases a deeper 15 to 25% move if monthly charts confirm the rejection. That's exactly the kind of correction we should prepare for if SPY pushes into $734 to $752. Now here's what makes this zone even more interesting. It lines up almost exactly with what Tom Lee at Fundstrat and several other prominent analysts have been projecting. Their S&P 500 targets of 7,300 to 7,600 for the coming period translate directly to SPY prices in the $730 to $760 range. The fact that an independent, rules-based technical system is flagging the exact same price area as major resistance is powerful confirmation. It's not just hype, it's harmonic math, institutional volume, and classic technical levels all agreeing. So right now the system is saying, we are not there yet. SPY is still trading below this zone, and both the intermediate and long-term systems remain on hold. But when price eventually approaches $734 to $752, this is the exact spot where we would expect a significant reaction, and where the long-term system would issue a major sell signal. Keep this zone on your radar. I'll update the system levels as soon as we get new real data. Thanks for watching.